Hi everyone, today let's talk about Amazon earnings. Then we'll take a look at the calendars, then we'll get into the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Amazon announced earnings and they beat pretty well, up 13% on revenues. You can see the stock is up after hours as you would like to see. Earnings per share 94 cents versus 58. Revenue 143 billion versus 141 billion. Web services basically in line with expectations. Advertising beating. Overall pretty good here for Amazon. Midpoint guidance is growth of 9.6%. Amazon continues to do quite well. They are in cost-cutting mode. They've laid off 27,000 employees, as most of these big tech companies have done. And overall, everything is looking good, and the stock performed after hours quite well also. Not nearly as bad as Meta or Google. Moving over to the economic calendar. Core durable goods, much better than expectations. Durable goods orders, better than expectations by a lot. Expectation was 1.7, we got 4.7. GDP numbers also coming in much better than expectation and much better than the previous read on all accounts. Everything looks good there. Jobless claims, slight tick up, but not very much at all. Pending home sales also positive versus a negative expectation. Fed balance sheet down around another $25 billion. And it seems like they're continuing to sell into strength. Looking at tomorrow, we got core PCE at 8:30. That could be interesting. Forecast is a step up from the previous read. Core is supposed to step down from the previous read, so a little bit of a mixed bag. Definitely going to be interesting at 8:30. At 10 o'clock, we got all the Michigan numbers. Those are fairly interesting, and that rounds it out for the week. Not much else on the Friday. In terms of earnings, you can see Amazon doing well. MasterCard missing on revenue just by a little bit. Merck & Co. beat on both. Comcast beating on both. Pretty big beat here on revenues as well as earnings. Intel beating on both. You like to see it. USPS missing on revenues. That tends to be a little bit of a bellwether, but still doing okay on earnings per share, even with the massive amounts of money that they pay their drivers. Honeywell missing on revenue. Overall, not so bad. Northrop Grumman beating on both. And then looking at tomorrow, we start the oil giants. We got ExxonMobil and Chevron. We also have AbbVie, Colgate-Palmolive. T. Rowe Price, fairly interesting, as well as Phillips 66. Moving over to Max Payne, you can see we are right here around 414. I would expect this to rally a little bit, maybe up into this 418, 419 finish for the end of the week. We could finish at the top of the calls, which is basically right where we're at, but just look how many puts here. I don't think we're going to go much lower into the Friday close, and 419 does make sense, which would be about a 1% retracement. Moving over to the charts, you can see the hourly chart was pretty choppy on the day, mostly lower, but then after hours, we got that guidance on Amazon, which pushed the stock up a little bit. You can see we're right in this range at the 21 EMA. If this level breaks here at 415.15, then you could see a push up into this 418 area, or the 55 EMA on the hourly chart up around 419. Does seem like we've put in a little bit of a base here today, much better looking than yesterday's session. Obviously, the daily chart is still a disaster. You can see this big leg down on the day. Most of the retracement was after hours, so we don't see that on the daily chart. Didn't quite get to 410.54, but if this after hours price action holds, we can get above that trend line, and then you have something to trade off of. Momentum still very bearish, but hourly momentum after hours is slightly bullish. Moving over to the NASDAQ, very similar thesis. Choppy session, slightly higher low going into the close, rallying after hours, definitely interesting. Want to see it get above 346.87, hold that level, rally up to 353.24, that could be interesting. This structure is still a disaster, again, just like the S&Ps. Let's go ahead and zoom in here on this structure. I've been really watching this for that 200 test. I think if we did touch the 200, that's going to find some solid support here on the daily chart. And we just haven't quite got there yet. It would not shock me if we got another pretty significant leg down, touch that just for a moment, and then recover all of those losses and end up slightly bullish on the day. That could be interesting. Overall, the day was 1.91% to the downside. Another big bearish day after the 2.5% yesterday. But again, we're seeing a little bit of a retracement after hours, almost 1% after these two big legs down in a row. Moving over to the Russell and the Dow, the Russell actually showed a little bit of strength on the day. You can see we hit that trend line, popped up quickly, tested 164, held that level. Now we're rallying a little bit after hours, slightly bullish momentum. And this was enough of a move here for me to look at a possible move back up into this 167 area. Bullish momentum, RSI back above the SMA. I did take a position here on the Russell. Does look okay going into tomorrow's session. We'll see how aggressive of a move that turns out to be, but overall looks okay, much better than the S&Ps or the NASDAQ in terms of charting. Dow, not as great. We're keeping this one on the daily chart. You can see that big leg down took out these previous lows. After hours, it did pop back up to those lows. If it can hold that level and rally back above 329.40, that could be interesting, but realistically, we're watching 325.72 here. Again, right at these previous lows going back to the end of May. Moving over to the equal weights on the daily chart. No change here to the structure or the levels, but I did want to highlight this massive volume day that we got today. 13.89 million shares on the day. And we got a doji. We really didn't move very much. And when we see these massive candles, either at the end of a move or as a move is starting, that typically means some kind of a change in direction. You can see these massive candles here. We got a base. Volume started to pick up, and then we ended up getting a bit of a follow through here. Similarly, we were at this consolidation. Volume picks up at that consolidation. We got a little bit of a rally out of it. Definitely interesting here at this current level. Big volume spike, and that could mean that this move is basically over, or that we're going to go into some kind of sideways price action before we potentially look for a bit of an upside push back into this 142.50 area. Moving over to Apple and Tesla. Apple not doing much of anything. It did throw some wicks here. Decent sized wick here on the 11 o'clock candle. And then after hours, we threw another wick to that same area. I don't have a level of support there. But going back, we can see that does mark the top here from April of 23 and a little bit of a consolidative type area. So we'll go ahead and add a level at 165.71. And you can see that is right in that same range that we came down to. So we'll add that level. We'll see if that holds in tomorrow's session. Again, you see volume starting to pick up. We're throwing some wicks, potentially people buying into a position or exiting a move. After this pretty decent down move, we are very oversold here now. It does seem like Apple might be finding a little bit of a base, obviously in the early stages. Moving over to Tesla, we do have a lower low, but RSI showing a higher low, so we have divergence between these lows. Again, still a very bearish structure, but if we can hold this base, rally up above 214, hold that level, could be an interesting trade. Momentum slightly bullish, but looking for a little bit of follow through tomorrow. Moving over to Amazon and Alphabet, you can see the big candle after hours. Pretty big push, 118 up to 125. Solid move, especially after this down move and the big bearish day we had yesterday. Retraced a fair amount of that. Could get above 127 tomorrow. That would be interesting. Obviously, the structure is still very bearish. Close to that highly traded zone could be interesting, but pretty decent pullback. Looking at Alphabet, similar thesis, massive leg down, touched the support at 122.54. We're seeing a little bit of a push higher after hours, especially with Amazon saying that their advertising is still doing fine, and they did beat on advertising, potentially giving Alphabet a little bit of room to the upside. Moving over to Staples and discretionary. Staples had a little bit of a leg down. As long as that 55 EMA at 67.31 holds, still in good shape. It's not doing much of anything over the past couple of days, but again, if we touch that level, holds, maybe we could look for a rally off of that. No change to the levels. Looking at discretionaries, continues to be a falling knife, even after hours selling off more. Took out that 148.89 level. Still technically watching 147. Talked about this in yesterday's video. These are very tight levels, and usually if they're that tight, I don't look at that level. The next one for me would be 143.03. Moving over to utilities and transports, the best and worst sectors right now. Utilities still looks good. Another bullish day, bullish momentum, bullish RSI, getting above the 50 line. Looking for a break of that 59.95 level. Still have the 55 EMA resistance at 61.46, but overall looks good. Transports, on the other hand, an absolute dumpster fire, continues to accelerate to the downside, over 2% down. We were watching that 213.27 level as a possible stopping point. Sure enough, we did hit that today after the breakdown yesterday, and that is a very important level. You can see we hit that here in December of 22, touched again in March of 23, touched again in April of 23. It really does need to hold if we're going to find a little bit of a base. We are super oversold on the daily chart. Next level for me, 207.38. And then below that, there's a lot of free space until 196.20. Transport's saying that markets are going to continue to go lower. Moving over to breadth, 50-day average, not doing much of anything. 4 days in a row, we're in that same range, around 15. Still holding a slightly higher low from the beginning of October. Interesting. Slightly bearish momentum. Moving over to the 200-day average, basically flat from the previous read. Still well below that 29.39 level. Have not gotten down to 24.25 yet. Maybe we throw one more big wick down to that level, kind of culminate here and then rally up. It is worth noting that we have clear divergence. You can see the much lower RSI reads going back to the beginning of October. Now we have much lower prices and higher RSI reads. So again, clear divergence between price and strength, but we haven't seen any solid reversals yet. We thought we had something here at the beginning of October, ended up with a lower high and a bigger breakdown. Moving over to yields, 2-year sold off a little bit. Down about 1.5%, still in the same range it's been in. 10-year, this is the bigger story, down 2.2%. Can't seem to get above that 5% level, almost as if someone might be defending that 5% level, hypothetically, potentially. But right now, we do have a slightly lower high. If this sells off a little bit more tomorrow, that could be a gift to equities. You'd like to see it take out that 21 EMA, maybe pull back to the 55, down around 4.5. That could be interesting. Obviously, structure still very bearish and we need to see some follow through there, but the slightly lower high is encouraging. Moving over to the dollar on the hour and the daily chart. Hourly momentum selling off, hit that 106.84 level again a couple of times here today. Pretty well defended, ended up breaking back down. You can see that wick high and the doji on the day. Momentum is still to the upside, and RSI is above the SMA, so you do have to respect that. Could just be an initial test, and we end up breaking through that tomorrow. If that does happen, that could be interesting and probably bearish for equities. The structure is still bullish, and you do have to respect that. But right now, 106.84 continues to be a little bit defended. Moving over to bonds, you can see a slightly higher low on both charts. Interesting, slightly bullish momentum. Structure still very bearish, so be careful if you're looking to get long here. I would be nice and patient. This has continued to downtrend, but just like we saw in the 10-year, we saw a slightly lower high, and on bonds, we're seeing a slightly higher low. Moving over to the volatility indices, I pretty much have the same thesis as I've been having. I still think we're going to see a little bit more of a pop. Move index, slightly bullish off the 21 EMA. Momentum still bearish, interesting, still holding in the zone. VIX, still very much a bullish structure. I do think we're going to see this get up to this 2450 area at trend resistance. Momentum is bullish, and you do have to respect that, which is part of why I'm saying I think we might see one more big leg down on equities before we put in a solid bottom. Moving over to my accounts, I did okay. Only down about $100 on the day, with the NASDAQ being down almost $7. Remember, it has popped up here after hours, so we'll see how those numbers even out in tomorrow's session. I did grab a 163 put for 46 cents for tomorrow's session. I do think the IWM might have found a little bit of a base. The Qs, I have 2 calls at 153, one for 5 days from now and one for 7 days from now. Small profit on that first one, small loss on the second one. I might roll these out or pick up some shares to turn that into a covered call position. We'll see how that plays out. Right, and then I have a put here at 347 for 8 days from now, sitting on $290 profit, meaning that there's quite a bit of profit left in that position. I was holding that throughout the session. I was able to protect almost all of my losses on that position with the calls that I had going into the day. Now I'm sitting on about $6 credit on this 147 position. So looking at a potential for a $1,200 gain if these puts expire worthless in 8 days. Overall, neutral to bullish, actually, going into tomorrow's session. I do think we're a little bit oversold, and I think Amazon might give us a boost into the Friday. Let me know down in the comment section what you think of Amazon. Are the earnings good enough to prop us up for tomorrow's session, or is this just going to be a short-term pullback and we're going to see more selling on Friday and into next week? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.